Hi everyone, welcome to my channel. This is a channel about some interesting analysis of listed companies' fundamental and financials. It is my first try to set up this account and share my personal understandings of business models and analyze the financial statements of listed companies. I will focus on one company today. Hopefully I won't waste your valuable time, and I'll be very happy if you think you can learn something useful from here. And I'll be so appreciative if you can leave some comments for my future improvement. I have to say it's really not easy to make a video from scratch, so hopefully I can have your support. So before we move on, please know that this is not investment advice. It's just my personal sharing, and I'm open to any ideas and suggestions. Please do your own research and make your investments rationally. I bet most of you are more familiar with MooMoo, which is a subsidiary of the parent company Futu Holdings. There is no specific reason that I picked Futu as my first company, as I'm not doing any advertisement, just simply because I found it interesting when I read its annual report. I found there was a high correlation between the recent interest rates and its revenue. For the structure of this display, all the information and data in this video are from Futu 2023 annual report. Firstly, I will summarize and lead you through its business models. I'll try to make it short and concise and let you develop a general idea of what it's doing, where its main customers are located, and the size of the business. Part 2 to Part 4 are the three key statements. I'll provide a straightforward analysis of profit loss, such as revenue, cost drivers, gross profit margin, net profit margin. So whether you have a finance background or not, we'll get it easily. I will combine the macro environments and provide you a guide to gauge its future performance. I'll go through some important accounts on the balance sheet and also critically analyze its cash flow. Can you imagine such a profitable company has a massive negative cash outflow? We'll see it later. And part 5 will be the needs conclusion. So for the main service, it functions as an online broker where investors can do securities trading, ETF trading. These are the normal buy and sell behavior, nothing fancy. They also provide a security lending business, which enables investors to borrow securities from Futu and sell at a price, then buy the shares back when it tumbles down, and return the shares to Futu. The investor will reap the profits between the price gap, but need to pay interest to Futu. So for margin financing, investors need to use their holdings as a collateral and borrow money from Futu. Likewise, they need to pay interest. And the second one is the benefits of its platform, where it collects all the news, research, market data, and everyone can have a read. Not just Futu, its competitor Tiger has also this service. The third one is corporate advice. Futu has completed dozens of IPOs, and I think they will keep expanding this service as long as the market is growing. The last one is a crypto license. They have a subsidiary called Panther Trade located in Hong Kong. Hopefully they will have this license approved soon, which will contribute to their revenue. So let's see the areas where Futu is available. The largest market, no doubt, is the USA. Then we can see the rest of the booming markets, such as Hong Kong, Singapore, Australia, Japan, Canada, and Malaysia. Please know that Malaysia is the new market they embarked on in the first quarter of 2024, and it has made magnificent progress, which may be displayed in my next video. And as you may see from the map, Futu hasn't expanded to Europe or mainland China. The latter due to some restrictions for now, but we don't know the future. Since it has almost covered the global markets, how many registered and paying customers in total, and how many funds they have brought. Please have a look at the charts that I summarized from the data from the report. Paying customers refer to those register and deposit money, which are the main revenue contributors. From 2021 to 2023, the increase is roughly 200K every year, while the increase of funds they brought has accelerated, especially from 22 to 23. When I was preparing the chart and saw an unproportional increase, I had a thought. Was it because of the soaring market in 2023, especially led by AI, that attracted investors to inject more funds to Futu? Or was it also because of their success in marketing? So with so many customers and funds, can Futu utilize them and convert them into its revenue and profits? I think we might want to know what are driving Futu's revenue, and what are the main expenses. So let's look at the revenue first. I have screenshot the revenue from its annual report, and please have a quick look at the past 3 years. We can count how many revenues accounts, what they are, and compare the absolute amount in Hong Kong dollars from 21 to 23. Then we can compare the percentage as well. So here is the snapshot. Obviously, brokerage income and interest income are the two main drivers. The brokerage income are stable, while the interest income increased dramatically in 23. I know there must be a reason here, so let's break it down. For the brokerage income, here's a definition from the annual reports. To put it short, the more investors trade, the more brokerage fees they earn. So you know they love frequent traders. You may ask yourself, are you a frequent trader too? Futu should be grateful because you are contributing to their revenues. And the next one is more important, that's the interest. To put it short too, they charge investors interest fee when they lend them money or stocks, which correspond to the previous service we mentioned. Besides, they also deposited funds into treasury bills to earn interest. They still record the interest on accrual basis, unlike cash base. For example, a 100K interest fee revenue doesn't necessarily mean a 100K real cash received. That will cause a timing issue, which affects the cash flow. You'll see it later. As you may notice, the key factor here is the interest rate that decides the interest fee Futu can charge. I didn't find the interest rate they charge customers, but one thing is for sure. They increase as the Fed rate hikes. Please have a look at this chart. Everyone must remember the consecutive rate hikes since May 2022. And if you still remember the increase in interest revenue from 22 to 23, you can match it with the FOMC rate trend. As we have discussed, Futu earns brokerage fees from normal trading and earns interest fee from securities lending and margin financing. So this may lead to a question. What is the size of these two businesses, and how many investors and how many amounts they have financed? The chart on the left is a summary of margin financing, and the right one is securities lending balance. In a nutshell, the more amounts with the current high Fed rates, Futu will generate more income. But the interesting part is the increase of margin financing clients from 22 to 23 is faster than that from 21 to 22. It also corresponds to the previous chart of number of paying clients. You can see a dip in 22 in the margin financing amounts, while a rebound in 23. Let's think, is it because of the poor performance of the market in 22? So the investors are not willing to borrow money. For the securities lending trend, don't be misled by the number, because the measurement unit is billions. It is growing, while still we can see a faster growth from 22 to 23 as well. For the expenses, there will be two parts. One is cost of sales, which will only incurred every time revenue is generated. For example, Futu needs to borrow money and pay interest to some banks first, then pass the interest costs and lend the funds to investors. The other is operating expenses. Whether Futu is generating revenue or not, these expenses won't stop, such as employees' wages, rent, etc. So let's move on to cost of sale. Likewise, we will look at the components of cost of sale. It looks similar to revenues, brokerage and interest expense, and there is one more different account, processing cost. Same as above, we can compare their total amounts, their percentage, and their trend. Here is a quick summary. I bet everyone must notice a surge in interest expense in 23, which proves our previous opinions that Futu pay interest on the borrowed money. Another fun thing is the brokerage fee halved from 2021 to 2023. Here's a question. What constitutes brokerage fee? Is the decrease due to the improvement of the trading system? And process and servicing fee remains stable, and that's not a high portion, so we might pass it. For the brokerage fee, from the description, we know that's the direct cost when investors execute a trade. The revenue Futu charges from investors minus the expense incurred is their gross profits. For the interest fee, From the description, we confirm our presumption that Futu borrows funds from the financial institutions to conduct the two pivotal businesses, which are securities lending and margin financing. I did an interesting analysis. I collected interest revenue and interest expense and put them to a chart. As you may see, the black line is the interest revenue and the blue one is interest expense. One thing for sure, since 2022, the FOMC rate hike has led to both increase of interest expense and revenue. However, compare the slope. The slope of these lines are not the same. We can see the interest revenue has a larger slope, which means Futu well utilizes the borrowed money, passing it to the customers and making a decent income. I would say this is an efficient and profitable model. The only problem is its consistency, especially with the onset of rate cut in the near future. So this is a gross profit. After revenue and cost of sale, we will have the gross profit amount. This can be a guide for us to know if the business is competitive or not. From the highlighted number, the average of its gross profit margin is nearly 85% over the 3 years. I would say it's quite a decent result. But like we have discussed before, there is another expense group, which is operating expenses. So after deducting it out of gross profits, we know the net profit, which is the final profit of the business. So let's move on to the operating expenses. Here are the operating expenses. So there are three main categories, and remember behind each one, there are actually numerous accounts. We won't be able to check every single detail account, so let's just take it from a very high level. So the first one, research and development expense, short for R&D, which is so famous for everyone. That is one of the most important categories in high-tech or growing companies, as R&D can keep producing newer products and support the business growth. However, it is really costly, and not every penny spent will pay back. From 21 to 23, we can see a hike, but remember the drop in brokerage expense, in cost of sale that we just noticed. I think it is paying back, so it's not a waste of money. The second one is selling and marketing expenses. They are very important too. So when a company produces new stuff, they need to sell it efficiently so that it can be converted to revenue. Interestingly, the expenses are decreasing. What happens in this case for Futu? The ideal result of marketing will be more paying customers joining and more funds deposited. We will analyze that in the next slide. It will be fun. And the third one is general and admin expenses. Please refer to the description here. It's more about the payroll office expenses. Remember, I mentioned that it expanded to Malaysia, so we will expect an increase in this expense category in the first quarter reports. So from the chart, we can easily notice the change in the proportion of each expense category. Obviously, in 2021, they have dumped lots of money in marketing. Actually, it is understandable as they need to expand and to promote their brand and products. And the marketing expense dwindle as more and more customers are joining with heaps of funds. The more interesting chart I created is to analyze how much it costs to get a new paying customer on board. It might not be 100% accurate, but just a rough guess. The rationale of this chart is that I divide the annual marketing expense by the increase of paying customers. For example, in 2021, with the high marketing expenses, they have successfully attracted nearly 700k new customers. The cost per customer is 245 USD, while in 2022, it was getting more expensive, which reveals a lower efficiency of conversion from marketing expense to increase of new customers. Likewise, is it due to the poor market performance in 2022? We need to prove it. Because in 2023, they spent less in marketing, but we can still see a same increase in customer number as in 2022, which leads to a slightly lower cost per customer. So how do we prove the correlation with the US stock markets? I have attached the three main markets screenshots. The green bar represents 2022. We can see that all three main markets are going down, while Futu remains still. So, but to now, At least we got certain that Futu business is highly correlated to the performance of the US stock market, as it will impact investors' trading behavior and their preference. Also, the macro environment, especially interest rate, will have a big influence as well. Since we have covered revenue, cost of sale, operating expense, now let's move on to the net profit. Let's see how much final profit it earned in the end. So here comes to the net profit. From the chart, we know that the net profit is quite stable in 2021 and 2022. Merely no change at all, but it's still better than a loss, right? From all the way down here, we know that Futu utilized the funds efficiently, more customers came on board, so we won't be surprised that in 2023, its net profit is much, much higher than prior years. But what's more surprising is the net profit margin, which soared over 40%, which signals a really strong performance. But they are the past. The recent first quarter report will tell us more information about the progress of the business. So we may come to a conclusion that its decent result is mainly driven by high rates. The business is highly correlated with the US stock market. Futu is still expanding, but there are fewer regions left for them. So the speed may be slowing down. We'll know more updates about its Malaysia market in first quarter. If you're interested, I can still do the video. And the last concern will be the potential rate cut. But if the rate cut can stimulate market performance, perhaps it can bring more benefits to Futu as well. But the offset impact still remains unknown. Since we have a detailed analysis of the profit loss, we will now move on to the balance sheet. I will focus on some huge variance on several accounts and try to unveil the story behind those numbers. So here comes your balance sheet analysis. Now we are on the assets part of the balance sheet. Basically, balance sheet is composed of assets, liabilities, and equity. And we will focus on assets first. Please have a look at the highlighted amounts, which shows a dramatic difference. We may question why Futu has so many short-term investment in 23 compared to 2022. Where did they invest the money? What was the purpose? Then I have a look and we'll see the breakdown of this account. Most of the funds went to treasury bills. Remember, in the revenue part, we already knew part of their interest revenue is from the treasury bills. And here we find a proof. It can be regarded as a safe investment, especially under the backdrop of high interest rates. They can keep making a decent gain. So here we have a full picture of assets section. It consists of current assets and non-current assets. Nothing else that intrigues me, so let's move on. Let's see its liabilities. Same as assets, liabilities also consist of current and non-current. And please have a look at borrowing accounts. It is double in 2023. So we may question, whom did Futu borrow from? And if possible, are we able to know the rate they charge Futu? Because the interest expense will reflect on the profit loss statements. So from its breakdown, they have reviewed the interest rate respectively in 2022 and 2023. To be honest, the average cost of interest rate in 2023 is roughly the same as the Fed rates, which is not that expensive. Is it because Futu has more bargaining power in funds borrowing? That's a good sign for its business. If anyone has any further ideas, please share your thoughts down below. So a quick summary on balance sheet. There are no obvious liquidity concerns from the statements. Now let's move on to the last part, cash flow. Here is the cash flow part. Basically, in cash flow statements, there are three types: operating cash flow, investing cash flow, and financing cash flow. Operating cash flow is more related to daily business, such as revenue, expense payments, wages, rent, and other operating costs. Ideally, in a perfect world, the net profit should be close to their positive operating cash flow, which means the business not only books earnings on the profit loss statements, but also earns the genuine money in their pockets. However, if we take a look at this chart, we go to the bottom, we can find an astounding negative 6 billion outflow. If you still remember, the net profit for Futu in 2023 is 4 billion. So they earn 4 billion on their profit loss, but they have a negative 6 billion outflow. So what happened? From here, I have highlighted two strange outgoings. One is the increase of loans and outgoings. I couldn't find enough detailed explanation on this movement. So from my personal understandings, this is the money lended to investors. So Futu will earn interest from this balance. In theory, after confirming the risk level of this type of business is under control, the more money lended out, the more Futu will earn. And the next highlight is the execution, as it is in decrease of payables. If anyone has the basic accounting background, you will figure out that this is the journal like debit account payable and credit cash. So whether it's a good sign or bad sign, we don't know, but we can be cautious of its future movement to see if it is really tight on cash. And on this page, we can see the investing and financing cash flow. Generally speaking, investing cash flow involves purchase or disposal of fixed assets, intangible assets, and etc. While financing cash flow involves more about accumulating or distributing funds through shares, bonds, etc. So here, in the investing cash flow, we see the decrease in the disposal of short-term investments. My personal understanding here is perhaps they're not that tight on cash, so that they can keep more funds in the treasury bills to earn the interest. And in the financing cash flow, we can find an 800K purchase of treasury stocks. They have reviewed that it's about the purchase of its own stocks, but it's much less than last year. So all in all, in 2023, even if with a 6 billion decrease in cash, they still have 49 billion cash on hand, such a massive amount. So I think there might not be any liquidity warning for now. So here comes our ending. Let's make a quick summary. Futu has quite a vast range of services, and with the high interest environment, its revenue and profits looks decent, but whether it can keep growing still remain a question. The balance sheet looks healthy. The cash flow doesn't pose any threat to the liquidity for now. Thanks for watching the video. If you have any advice, please don't hesitate to share it down below. And if you like my video, please follow and let me know which company you want me to share. I would be glad if you think the information I shared is useful, and hope you all have a happy day.